And we are back with another video, guys, and welcome back. In this video, I'm just going to do a quick trade recap for yesterday's trade, guys. So yesterday, gold gave us a nice interbank buy setup. It was a perfect entry setup, and you are going to see it in this video. So without wasting any time, let me get to the breakdown of the trade. So we are using the interbank strategy, right? When we are using the interbank strategy, then the 9 a.m. price or the time is very important. So the first thing that we do, this is the first thing that we do when we are using the interbank strategy, we mark 9 a.m. Once we have our 9 a.m. candlestick, we just put a horizontal line here, or it's a vertical line here. So I'm just going to put it like that. So this line helps us get this range here, which is the R0 range. And then once we get the R0 range, we're going to use the interbank strategy with the Fibonacci, like this Fibonacci as the interbank levels. So as you can see, I've put the interbank levels here, right? This is simple, guys. It's a plug and play strategy, one of the best strategies that you can use. So usually what we do, like you just put your levels like this, the interbank levels like this, and expect price to either go up here. And once it goes up here, you're going to sell. The market is going to sell off. But again, once price goes down, if price goes down here, we're going to expect to buy for the day. And then we buy here. See? So it's simple as that. You don't need to like complicate the stuff and like that. So in this video, I'm just going to do a replay of this price action just to show you how clear it is, how straightforward it is, and then you don't need to waste any time in the market. You just need to mark your levels, wait for entry, and then get in the market, execute that buy setup, and then get the profits, and then get out of the market also, because you don't need to be in the market 24/7. So let me just quickly remove this stuff here, so that I can explain to you how this setup, like in a clear way, how this setup formed and what we look for to buy. So with trading, guys, the simple, like you need to like simplify it. You don't need to complicate the stuff. As long as you know how to read the price action, everything becomes clear to you. So in this case, you see we have our levels, right? So what I usually do, I just wait for price to either go to this levels up here or go to these levels down here. So this levels, the blue line here, this is the 75% interbank buy entry level, and this is a sell entry level. And then the green one is the 100% interbank buy setup or buy level or whatever sell level. So it's as you can see up here, there's a blue line and then there's a green one. And then here, there's a blue line and a green one. So these are all explained in my interbank strategy ebooks. And then you can see. And then right now you see, right, after 9 a.m., we get a little push going up, right? So once we get this little push, they give us this high here, right? This is a temporary high. It's even this one here is a temporary high. So meaning that this highs, price is likely going to come back and take out this highs here, because they are very temporary. And then you see what it did. The price started going down. So when price goes down like this, we call this repricing. So this is whereby bank traders have to move price lower so that they can buy at a lower price. So bank traders cannot buy here. They are not allowed to buy. They're allowed to buy at the low of the day. So they have to form the low of the day. How do they form the low of the day? By using the interbank entry levels. So as you can see, we marked our interbank entry levels here. And then this is where like the bank traders are allowed to buy for the day. So what we see here, we see price repricing to the lower side of the market, right? It's going to reprice. Let me just adjust it so that it can be clear for you. So let's go and let's see how price reacts. So price is going to reprice to these levels, and then it's going to give us a reaction at these levels. And then you see it touches the 75% level, and then it rejects a little bit. And then also it trades inside the levels. So anywhere inside these levels, like it's a good buying price, like it's the discount price for buying, guys. So it's the lowest price of the day where you can buy. So you can buy here at the green line or at the blue line. It doesn't matter as long as you have your stop loss in order and then you use your proper risk management. So as simple as that. And then as we can see, like price is starting to show us a little bit of rejection. You see, once one candlestick closes above here, it's over, as you can see. So we had this candlestick here closing above the 75% level after showing a rejection. So they gave us a swing low here. This is our entry, guys. This is our perfect interbank entry. And then after that, you see the next candlesticks that are very aggressively bullish. So this is a sign that the bank traders are involved in that move. As you can see here, the candlesticks are very small because the volume is low. And then here there's money. Like once price reached the interbank levels, bank traders got in the market and bought gold. It's simple as that. So this is what we do with the interbank strategy also. So remember at the start of the video, I told you that, okay, I'm waiting for price to either go up or down. So in this case, it went down to these levels. So that's my buy signal for the day. So it means that, okay, I can tell, okay, today the bank traders want to close as a bullish market. So they want to close with a bullish candlestick like this and then the week like that. You see, this week is where the repricing happens, where the manipulation happens and whatever they want to do. So you as a trader is to follow what they are doing and then don't confuse yourself. As long as price reaches here, it shows rejection, you get in the market. And then after that, you see 3 candlesticks, already you are in profit. You'll never even get a drawdown. So let's see how it works, how it goes forward. Let's see. So you see the 4th candlestick, bullish also. There's no bearish candlestick inside here because the bank traders are involved in this move. So this is our first bearish candlestick, and it is because they took out this high here, as you can see. And then after they want to show you, like they want to confuse you that, okay, they want to go down now or they're reversing. But you as an interbank trader, you know, okay, this was their buy setup and they're targeting this high also. So the trend is going to continue to go higher, you see. So you don't need to like confuse. After they take out this high also, you see they reverse again, but price is still going up. And then this is towards the closing. So this was the move yesterday for the price action on gold. And then this was a crazy move, guys, because it's like it was from let me just say 350 here, which is the low where they bought, to 380. So it's like I think it's 300 pips going up. So this was a 300 pips move. So what you do, guys, let me just let me see. What you do, you buy here and then you let price go up just like that. You see, it's simple as that. You don't need to complicate this stuff. And this was a perfect entry. This is how you get the perfect entries in the market. You buy at the low and then you sell at the high. And then once price reaches this high here, this is the high of the day, and then you just wait for price to close. So once, like as you can see, once price goes forward, it's just going to close. And now they're just consolidating, confusing. You don't enter the market at this point. But if you miss this entry here, you switch to the scalper's paradise strategy. So meaning that you're going to use the 1 hour time frame and the 1 minute time frame so that you can scalp. So the scalper's strategy is inside my scalper's paradise ebook also. So you can mix the 2 strategies, because yesterday I've missed this entry, but then I was scalping. I was using the scalper's paradise on 1 minute. Just to milk this whole move, you see. So it's easier, like you just need to control your mind and then know what you're looking for in the market. Besides, if something you're not looking for something, don't trade it. If you see this thing, how price moves, price repricing to the lower side of the market, reaching the 75% level and then rejecting there. giving us a buy setup, you see. So here we had the close. So it's like open, the market opens, and then it manipulates to the lower side of the market. So this is repricing. They are repricing the market to the lower side of the market so that they can buy at a low price for the day. And then after that, price moves up like this. So this is a bank-backed move here. So meaning that the bank traders are taking part in here. So you can never go wrong if you are trading inside here, because the market is not going to reverse anytime soon. Once price rejects at these levels, it's just going to keep going up. And then you can get your money. Even if you're trading inside this range, as long as you are buying, you're going to make money. And then after that, the high of the day is formed after taking out this temporary high and this temporary high also. And then after a little bit of retracement and then the close of the day. So that's it, guys.